Afternoon all, how we all doing? Afternoon Alex, afternoon Kennelly, afternoon Prab. Get ready boys, Lee is incoming. I'm here. Oh my God. Well, that was an interesting one, wasn't it? CPI, very big move. Afternoon Diamond, afternoon Gabor, afternoon Yarp. William, Adam, Freeman. Virginia, who's next? Right, yeah, so CPI figures. So basically, we got a 5 year-on-year. CPI was an ever so slight miss by 0.1%. Core was on target. So what that means is CPI is obviously coming down. Inflation is coming down, which takes the pressure off the Fed. So the quarterly figure, which is kind of what's really more important rather than yearly, because things change from time to time, don't they? Why is my pen not drawing over there? There we go. So the US dollar inflation figure quarter on quarter now is 5, and that is a -1. So inflation is now coming down at 1% per quarter, which is beyond. Thanks for the follow, whoever that was, Ferdinand. Welcome aboard. So that is now beyond good, which is really good for the US. So it takes the pressure off any further interest rate rises, which obviously will devalue the. There's more chance now that the Fed may take their foot off the gas and not put the interest rates up. And as you can see, if you look at any US dollar pairs, the market wasn't very happy with it. Basically just meaning obviously that there's a much more chance of devaluing of the US moving forward, and probably faster, because the speed this is coming down now at 1%. The Fed were looking at getting to 3.85 by end of the year, or 3.5 by end of the year. If that comes down by 1% a quarter, they're going to be there before the final quarter, which means that their interest rates are going to be far too high, which means they're going to have to drop them quick, which means that there's massive devaluation in the US. So this could be bad news for the US dollar moving forward. So we'll see what happens. We'll see what the market makes of it. We've got the Canadian rates coming out as well. So we'll need to see what the market makes of basically everything, really, over the next couple of days. But certainly bearish US. Afternoon, Fletch. Afternoon, Henry. Afternoon, Anna. Always good stream, but excited for this one. Nothing special. Afternoon, Salty. Afternoon, David, Baggy, Peter, Brian. Bonjour. Oui, le bon. So as you can see, obviously as US dollar drops, all indices rise. So we had this huge spike on the DAX. It went absolutely nuts. And it's come back down and pretty much undone the whole thing. So it was basically a push straight up to ADR and straight back off of ADR, back to square one. The US dollar is pulling back. So this is an initial knee-jerk reaction, but likely the direction we're going to go. How long it's going to take, we don't know. So we'll have to wait and see. But every US dollar pair, as you can see, has taken a nice tumble. Lots of ADRs across the board, as you can see. And as I said this morning, the CPI figures will cause movement across every currency, because as the market repositions itself to drive into the US dollar or out of the US dollar, that money has to go somewhere or come from somewhere. So if money flows out of the US, it needs to flow into other currencies. And if it flows into the US, it needs to flow out of other currencies into the US. So that's why you're getting ADRs hit on things like Aussie CAD, CAD Swiss, Euro CAD, Euro Pound, Pound Odd. Nothing to do with US CPI, obviously, but they've all moved on US CPI because money has been repositioned during that news event. So we'll see what happens this afternoon. We've got the Canadian figures coming out at 3 o'clock in half an hour. Then we've got the press release at 4 o'clock. So once that news is out of the way this afternoon, the 3 o'clock news for the CAD, that kind of paves the way for FOMC later. So in those meeting minutes, we may get some information about what they're planning to do. but we'll see. So could be even more chaos later on for the US, but we'll see what happens. Afternoon, Crum. Afternoon, James. Morning, afternoon, evening, good night, wherever you are. So there's your ADRs. Market opens in 2 minutes. Be very careful if you're going to trade opening range breakout. I've turned the opening range breakout EA off on my accounts in a minute because I don't want to trade it today. After a volatile move like that, it's very difficult to know what's going to happen. Quite often when we've had a big, strong push off the back of a news event before the market opens, the market is exhausted and there's very little liquidity at the open. So you tend to get that sort of movement while the market is figuring out what to do because it's basically mass orders have all gone in. So it could well fly. Obviously, we never know what's going to happen, but historically, quite often we get a quiet open. So be a little careful if you're trading that today. We'll watch it and see what happens. We've got 1 minute to the open, 40 seconds. We'll go through the ADRs. We'll look at the RSIs because there's quite a few RSIs obviously lit up like a Christmas tree now off the back of the news. We'll watch the US dollar at the open as well and just see what that does. Probably won't do an awful lot, but actually let's watch the NASDAQ as well because that'll give us a bit more of an idea. And the Dow. So, yeah, busy one. Pound US dollar, my deal is sell at 124.201. Okay. You're going to sell at 124.201. Why would you do that? Fine, do what you like. Doesn't really make much sense to me, but anyway. Okay, markets open. There's your pre-market 15. Doesn't seem to be too much volatility at the open. Nothing much happening, is there? Nope, fairly quiet. Give it a minute. Just joined, Mumo. What the heck just happened with the DAX and the Dow? I'm disappointed. If you have to ask what just happened, what have you been doing in here for the last X number of days, weeks, months, years, or however long you've been in here? What do you think just happened? We just had the CPI figures released. My facial expression says it all. Why does no one listen? What's the most important thing you ever need to know about to do with trading? Fundamentals. What drives markets up and down? Fundamentals. What do you need to look at every morning before you even open your charts? Fundamentals. What does this tell us is going to happen at 1:30 p.m.? Fundamentals are moving the market. The fact that you come in here and ask why this candle appeared at 1:30, I just can't answer the question. I built an entire section of the website to track this stuff. It's so important. I give up. It's like disappointment in my children. Wick, sick. Yeah, it was certainly a sick Wick. That was for sure. A lot of bankers seem to be in holidays still. Yeah, well, it is Easter holidays, so less so in the US, but Anna, don't they? Doesn't the US open an hour ago? What we're looking at is the US stock market open, nothing to Forex. Forex doesn't open or shut. People have these, like the indicator I've got on here, this SM work time indicator, which you put in sessions. Yeah, when does a session start? The bell rings at 2:30 UK time My chart seems to have frozen. There we go. That's when the New York Stock Exchange opens. The UK Stock Exchange and the Frankfurt Stock Exchange opens at 8 a.m. Forex is 24/5. It never stops. So there is no open for New York. Banks open their doors, people get to their desks, but there isn't a time where suddenly stuff happens. There is for the stock markets. The stock markets open at 2:30, but FX is, people use an FX, you know, I think it's all come from this ICT stuff, isn't it? From ICT kill zones, as they call it. There is no kill zone. The market opens, it gets busier when the banks open and the banks execute their orders. The banks execute their orders throughout the day. So there's no such thing as a real time when everything gets executed. There is with the stock market though. When the bell rings, the orders go in. There's a massive flurry, what they call an opening cash balance. That's why the OLB trades that. So there's your 5-minute opening range. We've got 50 seconds left. That is very, very, very small. Today, not a big one. So be a bit careful with this today. You can see how jittery the market is at the minute. This could go either way, and it could go either way fast. Mumo, I was offline. I work in the forest. Yeah, but you still asked the question, why was that wick? You should know why the wick was. The wick was because there was CPI news at 1:30. So you shouldn't look at a chart and go, oh, I'm surprised by there being a big move. Even if you work in the jungle. From forest to financial jungle, exactly as Peter's just said. Can I get your free Forex course? Yep. You can. Look right now. The mst.info/bootcamp. I have to say, there's an awful lot of people in here today that don't seem to be able to, A, know what's going on in the market, worrying, B, read a ticker that goes across the bottom of the screen, giving you every piece of information you ever need to know about me. I might as well turn my mic off. Oh, shouldn't use that finger, sorry. I trade in Lambo time, Brian. I got one of those. I'm going to grow my hair like that, I think. I'm going to get a John Wick wig. Everybody gives a thumbs up, yeah. And C, click the like button. Right, so there's your 5-minute opening range. There's your 15-minute pre. As you can see, there's no volatility at the moment. So just be careful today. We're not going to, obviously, we've got major news coming up at 3 o'clock. We've just had a major news incident. Jesus, don't know if you heard that. That was my dog howling. That's weird. So yeah, we just had a major news announcement, and we've got the Canadian dollar interest rate rise or stability, whatever is coming in half an hour. So I don't think we're going to get a lot of movement on this for the first 30 minutes of the open. So probably best to wait, and probably today take a 15-minute break before the news. Might be an idea. So we'll look at that at 3 o'clock or just before 3 o'clock, before the news comes out. Diamond, people don't ever read things like documentation, emails. We call it lazy text syndrome. Yeah. This is a problem. It's the spoon-feeding generation, isn't it? This is, I've said this in here before. My mentor, when I was learning to trade Forex, he wouldn't spoon feed me anything, and that is why I am like I am today. Because when people say ask me questions, which I think a monkey riding a bike with a blindfold could Google and get the answer to that faster than you can type it into Telegram, I just think, what? You know, it's like, why is this not doing this? Let me Google that for you. There's the answer. people haven't got the drive to go and find out information themselves. They just want everything like hand fed. And I was exactly the same. You know, I shouldn't be like I am, but I was exactly the same, and I got kicked up the backside. Wow, now we're monkeys. No, I'm not calling anybody monkeys. I'm just saying. I'm just using an analogy to the extreme. Yeah. So a blindfolded monkey with no arms using voice control could probably Google the answer to something faster than he could type it into Telegram. I'm just using an extreme that is never going to happen just to prove a point that people can find out information very quickly themselves. I'm not being monkeyist or anything. I like monkeys a lot. I've got a teddy monkey, actually. Still, 50-year-old man has teddy monkey. If you get it from a TikTok video, forget it. If you can't get it from a TikTok video, forget it. Yeah, exactly. This is a problem. This is the problem. We are now programmed to get everything like that. Most streamers with a ticker scrolling on the bottom have nothing but junk ads. I'm actually using it for a useful message. Yeah, that's probably a bit. It's the same thing, isn't it? We get blind. Yeah, it's whenever I land on a website and you get a pop-up come up on the screen, the first thing I do immediately is close the pop-up. I never read the pop-up because 99% of pop-ups are either selling you something or they're getting you to sign up for a newsletter I don't want to sign up for. So I am pop-up blind. Regardless of what happens, if I go to any website and there's a pop-up appears, I immediately shut it. It might be really useful and exactly what I'm looking for, but you're programmed, aren't you, to just, nah, not interested. So I can understand, yeah, people don't read what goes on the bottom, which is fair play. I'm just trying to be helpful. So I'm not part of that crowd. I've taken your mentorship to heart. Oh, that's good. And I've got the results to prove it. There you go, David. Lear's now excommunicado. Chat GPT. I could be a monkey, but you need to be my banana. Anna, I'm not going to go there. Anyway, should we talk about trading? Right, so opening range breakout has gone to the upside, but as I say, be careful. Wouldn't want to trade that today ahead of the Canadian news. Sorry, it's gone off on a tangent today, hasn't it, already? There's your break to the downside on the NASDAQ. So the NASDAQ is again driving down as we had yesterday, and the Dow was just not interested. So there's no real confluence across these two at all. NASDAQ wants to come down, which would indicate that the US dollar is pushing. Well, mind you, that's probably not a good thing to gauge it against the Canadian dollar at the minute. So yeah, we have got a little bit of a push starting on the US dollar. Dow is very wicky to the upside. It looks like it wants to get this gap filled and return to origin on the news move. So that'd be a good short to take potentially. Nice wicks on the Dow, look. So we've got 3 minutes left on this candle. If this candle closes bearish, that certainly means they are not looking to go higher, doesn't it? So might be a good short. Right, so let's look at ADRs. So the fallout of CPI basically was obviously a very, very, very strong move against the US dollar. So we've got quite a few ADRs. So again, with anything you get ADR hit off the back of a news event, just be very, very careful. 100 monkeys jumping on the pairs. One fell down and bumped its head. Lee called the doctor, and the doctor said, "No more trading without checking the news." That works. MSTs, monkey structure trading. All right, let's stop the memes now. I'm going to get a load of chat OpenAI graphics with monkey memes now, aren't we? Monkey see, monkey do. That's the only thing you really need to remember. So anything that's hit ADR, basically, off the back of that CPI, be very careful, because this might be a fundamental shift in the US dollar, which means that we might basically get a big, 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 strong move on US, obviously negative US today. However, the Canadian news could well undo all of this because the CAD will pump the US dollar along with it as well. So if we get a big bullish move off the CAD, we'll probably get a big bullish move off the US dollar at the same time. So we just need to wait until they're the end. But as you can see, a lot of these moves are mean reverting already. So this could well just be liquidity runs where they're just basically taking liquidity. Canadian, take liquidity to the other side, reset, and then they're open for any direction they want to go in. So just be careful today. Could just be stop runs and traps, which is quite possible. Monkey Man, hello. That's a coincidence. Someone called Monkey Man has suddenly arrived, who's been off and making up new accounts on their YouTube channels. Aussie dollar CAD. So let's go through the ADRs. Aussie dollar CAD hit to the upside. So yeah, just to let you know what happens with me or the H1 mean reversion set file. We haven't made anything today. We're a slight loss. Closed out some profit, closed out some loss. As I said this morning, with the news, basically, because I was hedged, we've had some profits. So those two made $500. We've scaled out of some as well. So today, which is the 12th there, you can see. So we got some drawdown control being done there. We got some profits being made there. CAD yen, I had a stop loss. I put a trailer on that this morning, on that CAD yen, because it was in profit. I didn't want it to go into drawdown. So yeah, so basically, no gain, no loss. Drawdown is pretty much where it was before the news, so nothing really changed, as you can see at the moment. So Aussie dollar CAD, most of these ADRs that you're going to see today, you're going to struggle to get any reversals on, because obviously the news is what makes the ADR hit happen. Therefore, the reversal alert is at the origin of the move quite often. So you can see there, obviously, you're not going to get a reverse alert. This is coming down to fill that gap. So a lot of these you can place straight away for gap fills. Sometimes they work, sometimes they don't. But that's starting to come down and fill. Aussie dollar, US dollar. Again, same thing. It's coming down, starting to fill. I've got a buy on that one. CAD Swiss. So this one is more of a normal move. This is Swiss franc potentially. No, so this looks like the Canadian dollar. Yeah, Canadian dollar looks like it's been selling off ahead of this news as well. So the CAD Swiss, there's a potential ADR reversal there. You're just about to get the reversal alert here. Can't quite see it. It's a bit, but there's the reversal alert. Nice targets to the upside on this. That's the start of the move. So retest of that area potentially on the cards. So that might be a good one. Obviously, it's the CAD. So bear in mind, this is going to potentially go mental in 14 minutes. Euro CAD, obviously, there's opportunities if you want to get in on the reversal alerts. If these happen before the news, if you get in, you could easily put half an ADR stop on it and go for a flyer. So you could news trade this if you want to. It's obviously just a lot more risky. Euro CAD, ADR hit to the upside. Reversal alert is there. Half an ADR is 46, which is only down to there. So potentially that's a decent move. Back down to fill that propulsion gap is really all I would want to play on it. Euro pound. So that's an ADR hit to the upside. Already got short on this from there. So that was an hourly RSI extension. Yeah, and we had a reversal alert there, which has just been invalidated. They've just taken out that liquidity. We've got another liquidity area at 150 ADR. So if it pushes up to there and takes that, I'll get in second short up there. What else we got? Euro US dollar. So that's a potential liquidity run of the high. So that is last week's high. It's just been run. ADR hit. Lovely wicks. potentially moving back down into here. Again, the Canadian move could well do that. We've got these massive propulsion gap targets down here. So just be careful with this move. This may not be weakness in the US. It may be just a liquidity run and they're going to fly the other way. So just be careful with these. Pound odd. That one's already gone. You missed it. So that was an ADR hit earlier today. There's your reversal entry. Straight back up into propulsion. Likely to come up to there. New Zealand dollar CAD. I think I'll probably close that out, actually. 49. Pound odd. Yeah, there you go. Look, that's already done, that one. There you go. So that's the ADR reversal. Already out. Straight in, straight out. Very nice indeed. So yeah, pound odd, that's already played out and done. New Zealand dollar CAD. So there's an ADR reversal, obviously to the upside. That's off of that move. You're just about to get a reversal alert on that on M5. Possibly. It's just stopped shy of getting that alert. If you do get that, half an ADR on this is 38. That move is 27. So quick gap fill, short. Probably a good play on that New Zealand dollar CAD, but obviously bear in mind the news is going to land in 10 minutes. So don't really want to be taking too much risk on the Canadian dollar. US dollar Swiss. Nice potential reversal alert there. Again, play the gap fill, which is somewhere in the region of 30 pips, which is roughly half an ADR. So there's a few potentials there. Obviously, these are risky because we don't know if this move is start of a continuation short or whether it is a fake move and they're just going to fill this gap. And then obviously it can go wherever the hell it likes. So this is either going to be a big strong move or it's going to be completely undone in the next 10 minutes. So your choice on these ADR reversals. You haven't had a reversal alert though. So structure is holding on all of these. The only one is the pound odd, which has already played out. So there's your ADRs. I'll have a look at the RSIs quickly as well. GT, I'm from the high table and I want to deliver a message just to take my account and make good profit. If you don't do it, Mr. Wick's going to be very upset. Oh dear. Don't want to mess with the high table. H1 M5 mean reversion. That should be set up on the M5 chart. Yes, correct. Nick the Wick. Just past phase 1, Daniel. Thanks to the news. Good job. See? All these people that say you should have a news filter on your EA because otherwise it's going to get into lots of losses at the news. They don't think the other way round. Hey, you shouldn't have a news EA or a news filter on your EA because when the news hits, it creates volatility. Volatility is what makes traders money. Everybody can look at everything in two ways. For some reason, people look at it as the negative. But I always look at news as a good thing because news makes the market move. Market moving makes me money. Can't really go wrong, can you? Apart from if you're trading on a Fidelcrest account. Oh, look at this. This is about to blow big style. That must be hitting my drawdown limits on that. It's done 1,500. So I can only lose 2.5 grand a day. I would say this is about to go pop, wouldn't you? But let's see. Oh, it's gone pop already. There we go. I can't move my orders. Blown. 20. Still in it. That one. This one's still in it. Yeah. So Dow, I'm going to get in another entry there and try and get a big runner on the Dow and oil as well. So my entire account basically is gone into drawdown, obviously. Everything I had on manually was all wrong way with the news, basically. So oil Oil's gone out the highs. Yeah, oil's done a break for the upside. Yeah. This is going to blow as well. So can't do anything about these. It's going to blow these ones, unfortunately, unless we get a massively strong move on the US dollar off the back of the CAD, in which case, obviously, there's a good chance that will come down and the Dow will come down, which could obviously undo all of that. And I'm in happy days. So we will see what happens with the news. But these are the pitfalls of prop. Got to stick within a drawdown limit, which is very hard. Never mind. We'll see what happens. But as Daniel's just proven, if I'd have pressed the other button, I'd have passed. Go flip a coin. Right. 7 minutes to the news. So we are at the lows on the Dow. Rejecting the lows as well. So it looks like they're just clearing the decks basically ahead of the news. Eek. Did you look at Euro New Zealand? No, I haven't looked at that yet. Tamo, you're late again? Never mind. We'll let you off. Euro New Zealand. So that was extended on the hourly. I'm in a sell from there. Just waiting, basically. We just had a 1 hour reversal alert hit. So it's all coming down, but we are pushing back up quite strongly now. So this euro is that euro or is that New Zealand dollar? Very difficult actually to tell what that is. Don't know. Euro's just pushing up at the moment, so difficult to tell whether that's Euro or New Zealand because everything's going to be in a mess again in another 5 minutes. So, but it was an RSI extension on the hourly, and the 4 hourly is also extended at the moment. You just had a reversal alert on the 4 hour. Yeah. So there's your reversal alert on the 4 hour. Nice wick rejection. We are pushing back up again, though, at the moment. So we've just put a lower low in. At the moment, we're putting in a lower high, but this is going to change in the next 5 minutes. So we'll see what happens. But it's extended at the moment. So we are expecting some kind of pullback on that move, a la that. So if it doesn't get that and we push up for another leg, we're just going to get embedded up here. And then you just got to wait basically for the next pullback. So I'm in one already. We'll scale into a second if necessary. There's not really anywhere to look at to the upside here. We're just broken out the highs. So you've got to go out to the daily chart to find your next level, which is difficult to say. Somewhere around there, I would say, is probably where you'd be looking. But I doubt it will get all the way there without stopping. You'll get a pullback before that. So 3 ADR away. But I'm in it already from yesterday. So wait and see what happens. We'll look at all the RSIs in a minute. We've got 4 minutes to the news, basically. So there's no point in starting the RSIs because these are all going to update in 4 minutes anyway. So I'll wait for these to update. And then we'll have a look through all these. And obviously, we watch the CAD. So I'm going to watch the Dow along with the US dollar CAD. Okay, so the NASDAQ has completely undone the move on the news. So just complete return to origin straight away on that. Euro US dollar is holding. Pound US dollar will be holding as well. So everything else is holding. NASDAQ's completely undone the move. Interesting. So we'll watch the US dollar CAD and see where this goes. Actually, or shall we watch? What am I in? What are we in? What are we in? Actually, what am I in? No, I haven't got pound CAD on. Let's watch CAD Swiss. That will give us a good indication of what the CAD does. Dollar didn't even take last week's low. Well, dollar what? There's lots of dollars. I'm in Euro New Zealand with the ADR from yesterday evening. Yeah. Pretty much the same entry. That Euro New Zealand will be the same entry pretty much as the H1 RSI extension. So yeah, pretty much the same trade. $294, 265. So it's same trade basically. Am I still in Euro Yen from yesterday's reversal? Yep. Well, the H1M5, yeah. Can you move your face cam? I want to see your watch list. My watch list? Well, that's just the market watch. It's not. It's just the market watch. It's just all Forex pairs. I don't have a watch list. I watch all Forex pairs basically. Gold 0, 1 bruh. Have I had a bruh? I didn't see a bruh. Oh yes, I did. Tamo called me bruh. I'm gonna get me gold on. Get me gold on. I haven't got me. There we go. That's better. Properly brewed up now. I'll leave it on there. Oh, there we go. 3 o'clock news. There's your rates. That's pushing down. Looks like it's probably as expected. $4.5, yeah, as expected. GDP is 0 versus 1.3. Inflation to fall quickly to around 3% in mid-2023, and then decline more gradually to 2% target. Okay, so that's an as expected result. So let's see what that does to the CAD. Not a lot of movement on the CAD at the minute. Very little, very little. So US dollar CAD undone, return to origin completely as well. No reaction in the markets at all. This should really be strong Canadian dollar. Normally when you get an as expected, you tend to see strength. So looks like it is starting to strengthen a little bit, but not a lot of reaction at all there, is there? Just give it a few minutes. Brian's running out of towels. That's not good. Oh my God, someone told Lee to move his ugly mug. How dare you? How dare you? How very dare you? Should we buy your gold? Yeah, definitely buy my gold. I'll give it. I'll tell you what. I'll give this one. This one. I don't know if you can see, but it's got like diamonds in it as well. Don't know if you can see, but it's actually diamond encrusted. You can tell by the color how yellow it is that it's very, very, very high quality. So both of these I got for 12999. So yeah, you can have them. I'll tell you what, I'll give them to you for $200, seeing as I paid $1,299 for them. £12.99 they were on eBay. You can have them for $200. It looks like he's about to drop the most expensive Forex course. Yep. Don't do Forex. That's what you should do, isn't it? I should launch a course. How much have you got to invest in your very first Forex account? $2,000. Okay, brilliant. Give that to me because you're going to lose it. I will take it and show you how to do it. How much have you got? $150. Okay, give that to me because you're going to lose it. How do you know? Because I did it lots of times. I've got no traction at all here today. This thing's dead in the water. So we are getting some Canadian dollar strength. We've got 1 minute left on this candle. This looks like it. This CAD Swiss looks like it might be a decent ADR reversal. We've got a nice target to the upside here, just under this Asian low for a retest if it's going to continue down. But we are seeing a little bit of strength coming through in the Canadian dollar. Marginal though. It's going to undo the moves we've had, I think, but weak, very weak. We'll have a look at the RSIs while we're waiting for that to do something. So everything's lit up like a Christmas tree. Swiss yen, Virginia, we'll look at that. Yep, we're going to look at that. That's on 4 hour. When are you doing a meet and greet? I'm not. I don't want to meet you lot. No plans to, put it that way. EuroCAD just got in short. So that is an ADR reversal and an H1 M5. Yeah, so it's an H1 M5 mean reversion back down into there. Also, it is a reversion as well on ADR. Oh yeah, by the way, I've put together an indicator. Well, I'll put it this way. I'm in the process of putting together an indicator called Market Structure Trader. It's really good. Yeah. So basically, it shows you your trade history. It puts the symbol and time frame on the chart. It shows a break-even line. It shows you all the propulsion gaps. And it shows you yesterday's high, the previous day's high, and the weekly high and low. Yeah, all in one indicator. Ta-da! Look at that. So I've simplified it all basically, and I've color-coded the propulsion gaps so that the propulsion gaps that are active and open are shown in a different color to the ones which are filled. So you can see all the historical propulsion gap completions, and you can see easily, very easily, where we're looking to go. You can adjust these weekly highs, previous day's highs, and yesterday's highs and lows to color code those as well. And obviously it just shows you the symbol on the chart. And as you can see, it will automatically plot your trades on the chart as well. Like so. There you go. So it automatically plots your trades for you. But you can turn it all on or off, depending what you want. So if you want to say, I don't want to see my trade history, you can turn it off and your trade history vanishes. And you can say, I don't want to have propulsion gaps, and it will turn them off. So I'm just putting together one thing. So we just have one indicator, basically. But I'm also in the process of fine-tuning stuff, because I like the propulsion gaps are great, but I'm just fine-tuning them so that they're a little bit clearer. We don't need to see all the old propulsion gaps, and you can't color code them at the moment. So it's much nicer if you can color code the propulsion gaps, I think, so that they're, you can very quickly and easily see, we're going here and we're going here. Yeah, all this other stuff that's in the same color makes it a little bit more confusing. So just dulling it all down, I think, makes the chart clearer. But anyway, that's in progress. Right, ADRs. Enter anything here is a notice line. Yeah, it's already got that in the. It's all it is. It's the other indicators basically stuffed into one with a little bit of a modification to them. So it's just this one. Look. Yeah. So it's just exactly the same. I've just stolen it and rolling it into one indicator just so I don't have to muck about with hundreds of indicators. Just makes life easy. And I can just send this to people and go, here you go. Here's all the other stuff. Right, so EuroCAD's coming down. Looks like we got a bit of CAD strength showing, which is nice. Oh my God, Aussie dollar Swiss. Oil is killing me. Everything's killing me. This account is going to get killed. How to blow 2 accounts. It was a 2-for-1. That's the only reason I'm trading these aggressively, because basically they're free. Not for MT5, Adrian, no, because I hate MT5. One looks great. How long does it take you to create an EA? Oh, it varies. EAs depend on the complexity of the EA. Simple EAs, a couple of hours. Market reverse alerts EA, that was in development for months. All varies. Anyway, let's get the RSIs done. So it looks like we're going to whiz through pretty much every chart here. So I shall clear my throat and get a drink. So starting with the hourlies, Aussie dollar CAD, hourly RSI extension. So you may not have got a reversal alert on that. No. So this is starting to come down. You got your M pattern there, but you don't get the reversal alert because of the strength of that move, which is based off of the US dollar CPI. Excuse me. So that is starting to come down now. You could probably jump in that now. However, it might come back down to origin and bounce. So that's kind of a little bit late, and you won't get a very clean entry on that at all. We have got this propulsion gap down here as well to target. But if you look at the chart at the moment, this is the kind of move that we're experiencing now. Yeah, and then it petered out and carried on. Yeah, so this shift that we're having at the moment with the Canadian dollar weakening was only because of the US CPI. So the Canadian dollar interest rates have come out as expected. They said that they're going to get on top of their inflation pretty quick. So that could well continue down on that move now. This could also be a peak formation low, in which case we're going to come back up and sort that and that. So just be a little careful. Anything you're getting into now, we've got this new Canadian rate out. We don't know whether it's still going to be a strong move or not. So we need to wait for the press conference, which is coming at 4 o'clock. As soon as we've got the press conference out the way, we'll find out what the forward guidance on monetary policy is. They have released some information here, as you can see, as to what they're expecting inflation to do. They're expecting it to come down fairly quick. 1.4. GDP 2.3, inflation average of 3.5 in 2023, 2.3 in 24. ECB 3.75 fully priced in since March. Okay, so so yeah, we need to wait and see what they come out with from the Bank of Canada, basically. So this move that we're seeing today, right now, off these rates for the next hour, could well just undo a lot of this move that we've had on the US dollar, and then the Canadian dollar could weaken. So if inflation is coming down at the rate of knots that they are expecting it to continue at, and they're expecting 3.5% this year, means we're coming down by roughly 2%, which means probably in 2 quarters' time we'll be at target, maybe 3 by end of year. That takes the pressure off. which means they don't have to do interest rate rises. Exactly the same as we're seeing with the US dollar. So that would indicate weakness in the Canadian and weakness in the US dollar. So both of these, Aussie dollar CAD pushing up now, is pushing up because we've had weak US dollar news. This could also be weak Canadian news. So you could see the Aussie fly now against the Canadian dollar. However, oil pricing is starting to recover, as we've just seen. Oil is breaking out the highs. So at least a push up into there if the Bank of Canada comes out in the press conference and is bearish. We could see a big push up to 150, 175 ADR today. So any mean reversions you're taking, US dollar Swiss has just hit 125. So that's still coming down. US dollars coming down hard. So yeah, any of these, obviously be careful with any mean reversions that you take today, because these are fundamentals and we could be seeing a complete change in direction for the fundamentals for each of these pairs for Canada and the US. CAD Yen, we'll have a look at that in a sec as well, I think. No, CAD Yen's not on the charts. With regards to propulsion gaps, do they always get filled over time? Surely it can take months, years to fill some of the gaps. Well, have a look. You can see it on your chart, can't you, how long they take? So yeah, sometimes they will get left behind. This is what I'm saying, fundamental shifts, yeah? When a fundamental shift happens, it doesn't matter whether a bank is caught offside. These propulsion gaps, basically, what they are is large institutional moves. With these large institutional moves, institutions get left behind. It's called unfinished business, basically. They will have a position in the market, and the market will move swiftly away from them in the opposite direction. So the banks that have the power move their price back into the area that was previously had unfinished business to balance their books. Then it will go where the hell it likes. A little bit like a stop run. When they do a double-ended stop run and they bring it back into the middle, that leaves them open to go wherever the hell they like. These are the same principle, basically. So it's a large move where the market gets attracted back to these levels, and then either the people that started the move pile in and push the move further on, or it just gets finished and they carry on going whichever direction they're going. Either way, these are magnets for price. Yeah. But if there's a fundamental shift, i.e. you get a massive propulsion gap formed, like we've had here because of US dollar CPI, this isn't a particularly massive one, is it? But there. And it pushes up to there because now the Canadian dollar is going to be massively weak with the US dollar moving forward, they may never come back here. Yeah. But you look at the vast majority of these on the screen. If you were to count how many propulsion gaps are on the screen now, so starting here, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, done that one, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60. Let's call it around 70, yeah? Out of those 70, 1, 2, 3, 4, 5, 6, 7 are in play. 10% haven't been filled yet. 90% of those propulsion gaps have been filled. How long they take to fill is entirely up to the market, isn't it? But the vast majority of them will usually fill within a week, depending on the time frame you're looking at, obviously. But you know, you look at it. Yeah, it doesn't take a rocket science to work out when you get these gaps, the market is attracted back to them. This is previous areas of liquidity. So the banks and institutions have dumped a large amount of money into the market there. When we come back to that area, we will get a reaction of one way or the other. Yeah. Huge propulsion move, retest it, push away, unfinished business, try again, unfinished business, complete. That took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days to complete. Yeah. So if you get stuck in a position which is moving away from you, and you've got 4 positions on and you're 6 days into it, and you've got 4 whacking great propulsion gaps sitting down here somewhere, it's highly unlikely they're not going to come at least to that one, if not that one, if not that one. Look at these two here. That one there. 1 day, 2 days, 3 days. Didn't fill it, but it came back to it. So if you got in a short here, there's your target. So that's what they are. They're targets, which is why on the indicator that I've just built, I've made them different colors. So you can clearly see there aren't any on the screen. That's why. Let's go out to the hourly. What? Why are you not drawing? It suddenly stopped working. Oh, it's because I'm miles in. Sorry, there we go. I was miles in the past. Yeah, that's why I've made these a different color, and you can make it as garish as you like. Look. So gap target color. Yeah. Make it obvious. Do you want to be longing or shorting the market right now? Probably shorting, don't you? Because there's all this unfinished business to be completed down here. So I'm going to short, I'm going to target that. If it goes up further and it makes another propulsion gap, I will move my target from that one to that one. As long as the nearest propulsion gap is in target, in profit, you're always going to have an exit, aren't you? You know, so push, get in short. That's my target. Didn't work out. Push, get in short. Now that's my target. Tick. Or hold out. There's no right or wrong. Like I say, in everything, everybody's going to have a different way of getting in a different target they want to go for. But that's what they do. So sometimes they will take a long time to get filled, yeah, and sometimes they will get orphaned and left behind completely. So I could build into it, you know, an expiry date. In fact, it does that already. Look, your expiry date is your start calculation from bar. So let's say, for example, if you wanted to pick how many candles back, you go, right, if it hasn't got back to the propulsion gap within 4 weeks, say, for example. So where are we now? 12th of April. So let's go to the 12th of March. There, roughly. So that's what, 500 and something candles. It's 566 candles. So what you could do is you could say, right, if on the hourly chart, I only want to look back 600 candles, which is 1 month. Yeah. So if basically we've got old gaps that are more than a month old, I'm not interested in them. So I'm still interested in this. I'm still interested in this. And I'm still interested in this. But that big old one up there we saw, not interested in it anymore because it's more than a month old. So you could set a time on it if you want to. Again, I've never tested anything like this. I just go for the closest gaps. Because, you know, look at it. We fill them all the time, don't we? Yeah. We're always filling them. So, but if we don't fill them, fine. We'll move away and I'll scale in, I'll scale in, I'll scale in, and I'll find another one that's within my break even. I presume propulsion gaps are the same for indices. Yeah, I guess. Let me make them a better color so you can see. Yeah. Filled, 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 all filled. Everything's filled. Everything, literally everything is filled. Now I want to be short in the DAX because there's a load unfilled down here. There's nothing up here unfilled. Everything is down there. Yeah, it's all to do with liquidity. Yeah, it's the same principle as the the so-called smart money concepts. It's all about liquidity and where the market can go. The market has to go where it can find order completion. So it's yesterday's highs, last week's highs, yesterday's lows, last week's lows, last month's lows, last month's highs, previous support and resistance areas, previous shooting propulsion moves where you've got unfinished business. That will all, it's all liquidity. The market runs on liquidity. Retail sentiment, yeah, that's why we trade the opposite of retail. Yeah, if retail are going in one direction, the market will go the other. Why? Because if retail is shorting something, their stops are at the high. That's liquidity. A stop order in the market is a liquidity order. That's where it is. That's where it goes. Yeah. And that's why the market moves up and down. The banks push and they pull, which is them getting into positions and taking profit, getting in, taking profit, getting in, taking profit. They're just running liquidity to liquidity to liquidity, wherever that liquidity is. They will have an overall direction, but they'll never go anywhere in a straight line, will they? And that's what market structure is. The whole premise of market structure is the fact that market moves up and down. As long as it does that, you can make money. You just need to know where it's going to go. When it's going to go there, no one can tell you. And that's the whole joke we have in here all the time, isn't it? About the crystal ball. You can't predict the future. You can't time your entry. It's impossible. You can, however, identify areas the market is likely to go to. And it's going to get there within its normal movement, which is what ADR is. So you combine ADR with propulsion gaps and market structure. It's the perfect combination. You've got a rough idea of how far we're going to go today, tomorrow, this week. You're going to have a rough idea of where we're going to go in the form of propulsion gaps. And you've got a rough idea of how to time the market in the fact that the market structure shifts in the opposite direction. The buyers are starting to enter towards the target we have, but it's going to take 3 days to get there because it's 2.5 ADR away. Just putting all the bits and pieces together to give you a system or a strategy. This is a good time to get in. That's a good time to get in. Why? Because every time it gets up there, they need to do the opposite move because they're going to run out of liquidity. When the relative strength index gets to the highs, it means they're going to run out of liquidity because there's no other idiots really willing to sell because they've bought everything. If you can't buy anymore, the only option you've got is to sell. Where are you going to sell to? Well, the previous areas we came from, which is the propulsion moves. When did we start buying? We started buying there. Right, let's go back and test that again and see if there's more buyers here. Is there? Yes. Then we'll get a bounce. They will add to that position. That's all these are showing you. They're showing you where the banks placed their orders. Whether or not when we get there it's going to do that or that, no one knows. But what we do know is this is where the market comes back to. That's why we use them. But they're not, there's no timing involved in them. They are literally an area you can look at. There you go, little propulsion gap lesson. I keep doing propulsion gap lessons. It's probably the most asked thing I get. But it's good because it's a very good indicator. Dow stuck in a range. Canadian dollar stuck in a range. Nothing's doing anything, is it? Whoa, look at that. Euro CAD's flying. So that Canadian dollar looks weak. Swiss yen's just hit its weekly range. That's your first weekly range of the week, Swiss yen. So Swiss yen's done its weekly. So where we are Monday. So there's your move on the Swiss yen. So again, another reason to start looking for shorts. We've already done our entire week's range by Wednesday. So it's probably going to start running out of steam at some point soon. Look for support resistance. 4-hour chart. got an area here which has been respected a few times. Then that is also ADR today. So that'd be a good ADR short if we can get there today. Afternoon, Cabbage. Cabbage. David, I like Aussie dollar CAD shorts. Yeah, so RSIs we were talking about before I got distracted, weren't we? Yeah, so Aussie dollar CAD, good short. H1 RSI extension. But it's one of those you've kind of. There's the target, obviously, but as we just been through, it may or may not come down to here today or tomorrow. It may find buyers here and bounce and then continue up and come back here next week or the week after. Friday, Monday, no idea. So I mean, these are absolutely useless to you for timing anything. They're just a case of, I've got a condition that's met that I know reverts a lot of the time. I've had a reversal alert, I haven't in this case, that I know means that the sellers have entered the market. We've hit our average daily range for the day, which means we usually run out of steam. And I've got a target to aim for. Tick, 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 tick. All you're doing is you're putting a case together. You're a solicitor that trades the markets. The bigger, the stronger the case, the more chance of that trade working out. And the faster that trade will work out as well. Aussie dollar CAD. So we've covered that one. Aussie dollar, New Zealand dollar. That's extended on RSI and embedded. We've been embedded on this for a while now since we got here. So we are stuck, totally stuck sideways and embedded on the RSI. We are extended on the 4 hour and the hourly. So 4 hours just got its extension as well. We haven't been up there for a while. We've got two really good resistance areas coming up. Yeah, previous support turned resistance. That's been resistive multiple times. So that is again ADR. I'm already in this one on an H1 M5 reversion from yesterday. Targets to the downside. We've also got targets to the upside. This is another good example of, you know, the propulsion gaps. When you've got something that's like targets to the upside and the downside, you're sitting here with an RSI extension to the upside with a big old target there and a big old target there and a bit of a target there. Yeah. So those are your targets potentially to the upside. We've also got downside targets. So where we are right now is equidistant between the moves that could potentially happen, isn't it? Yeah. So what do you do there? You can get in either way, can't you? So right now, you could take an RSI extension short, and if it doesn't play out, you know exactly where you're headed. If it's going up, you can plan your trades to get in these areas. And once it's done those, it's got these propulsion gaps to the downside, it's left. And on the way, it will probably do a propulsion move into there, leave another gap. So as long as your average price is within that gap, that gives you a nice, quick, easy exit. Use them as targets. And they're dynamic, yeah? They change. If you look at it on the M5 time frame, these are getting painted all the time. Yeah, so we got from yesterday, that one's pretty much done, but that one there from yesterday is a new target. When we were trading this yesterday and got into a trade here, for example, where I got in today, that propulsion gap was there. This propulsion gap kind of got filled 1 pip out. Then we had another propulsion gap there. So if you'd have got into a trade, that's pound Swiss hit ADR. So if you got into a trade here and you were targeting this propulsion gap and it pushed against you and you took a second position up here because you had a new propulsion gap in, yeah, your average on those two would be here. So you had an exit when you came to that propulsion gap. Or you could wait for it to push up and get into another trade there and it caused a propulsion gap there. Yeah, so your average on that position, and that position would have been somewhere around here, giving you an exit on that propulsion gap. So they're going to keep getting drawn as price pushes. And if you're short on something and price is pushing against you, use the propulsion gaps to retarget. Don't go for the one that was there. Yes, it's highly likely to get filled, but you just get yourself out. And that's the whole premise of using the half ADR targets and third ADR targets. Oil news, yep, 330 crude oil inventories just come out. As usual, oil is reacting incredibly aggressively off the back of the crude oil inventories. Doesn't care. It really doesn't care, does it? So yeah, there you go. So Aussie New Zealand potential short. H1 already in it short at the moment. Excuse me. Aussie dollar, US dollar. Got a buy on that one at the moment. That was off of a RSI extension back here, I believe. Oh no, it's there. Sorry. There you go. Done drawdown control on that one on Monday. Haven't managed to get far enough to get out the position yet. Propulsion gap, it's coming back down to retest here. We've got another target to the downside there. We've completed that one. There you go. Again, prime example. Propulsion gap. Yeah. Push down. There's your target. Done. Big target to the upside up here. We've also got one down there. So if it comes back down into there, you can take a second, assuming it's going to fly. Aussie dollar, US dollar. So that's extended to the upside now. Your M5 mean reversion would have been, oh, you haven't got that today because it's a US dollar cross. So that one's no good. Impossible question, I know, but how frequent are big squeezes? If you normally trade 5 or 6 pairs at a time on average, would you expect a squeeze once a week, month, quarter? If you're trading 5 or 6 pairs, you won't notice a squeeze until you're in one. So, you know, if something squeezes and you're not in it, you're not going to get squeezed. So the more pairs you trade, the more chance of a squeeze there is going to be. Looks like the US dollar's powering up. But yeah, squeezes will happen infrequently. You need fundamentals, and they always happen off the back of a fundamental shift. I always use this Aussie New Zealand example now because I got stuck in it. Yeah, this was a fundamental shift here. All of a sudden, the New Zealand fundamentals became massively strong against the Australian, and it went like this. But look how often this happens. And a squeeze is also different in definition for different people, because you will only be squeezed. A squeeze, basically, to me, is the definition of a squeeze is when you get something that is uncomfortable in your P&L. I haven't got anything uncomfortable on this one at the moment, but when something gets uncomfortable, either your entire drawdown or an individual currency. Yeah. Obviously, the more currency pairs you trade, the bigger this is going to be by definition, which is why you should always limit your exposure. But if you space out your trades 1 ADR apart, these aren't ADRs, by the way, these are just an example. If you space your trades 1 ADR apart and you do automatic drawdown control 1 ADR apart as well, by the time this gets 5 ADR against you, yeah, you may not even be in a squeeze. However, someone else trading the exact same instrument as you, who has got in half an ADR apart by the time he gets here and is doing his drawdown control 1.5 ADR apart, will be in a terrible squeeze at 5 ADR. So, you know, as you've said, it's an impossible question really to answer, because what is your definition of a squeeze? For me, a squeeze is when something gets to something like 2.5 to 3% in drawdown. I'm classing myself as being squeezed. However, it depends on your spacing as to whether you will be in 2.5% of drawdown or you will be in 1.5% of drawdown because you've scaled out on the way. Yeah, so you can't answer that. Some people on that Aussie to New Zealand move will not have been squeezed. So ADR at the moment on this is 82. So 82 is something like that. Yeah, so that's about 82. So let's say you got in long on the 4-hour RSI extension here, and it moved down that far. So that's roughly 5 ADR down to here. So if you got in here, 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 and here, you wouldn't have got into that one. Yeah. When this pulled up to there, right, if you'd have entered with exactly the same lot size on every single trade, when it got to here, you had an exit at break even. If you'd have done drawdown control on the way, you would have had an exit there with profit. If you'd have used a 1.3 multiplier on each of these positions, you'd have exited with a lovely profit. So was that a squeeze after that 3 ADR push and then pull back or not? Some people yes, some people no. There's no answer to that question, is there? Because it depends when you did drawdown control, if you did drawdown control on those four positions, and whether you were multiplying your lots as to whether or not that was a beautiful exit with a load of money, or whether it was a break-even exit after a, thank God I got out of that after 2 weeks. Or if you've done no drawdown control at all and you missed that, it became a proper squeeze, didn't it? The next exit opportunity you had would have been roughly 1, 2, 3, 4, 5, 6, 7, 8 ADR before you got a complete reversal and a lovely profitable exit. But could you withstand an 8 ADR squeeze? Whether or not you can withstand that is going to be dependent on how many pairs you've got on, how much profit you've made, whether you're doing drawdown control, whether you're losing a lot multiplier, whether you've got into lots of different Aussie pairs at the same time, or whether you've got into one Aussie pair. Yeah, if you just trade one Aussie pair and it's squeezed like this, you just handle that for 8 ADR and wait for it to pull back. You might have taken something between 5 to 10% drawdown on it. Difficult. See what I mean? This is why in the bootcamp, I don't give any definition of anything to do with squeezes or drawdown control, how to do it, because everybody's going to have a different experience with it, depending on how you're getting in. And what your current exposure is, your pairs are, you know, there's too many variables. David, is there any way to get in on market reversal alerts on tick? No, because an on-tick reversal alert is not an on-tick reversal alert. It's a no. Right, so you would have gone short on oil there, yeah? If this now pushes up like this and never gives you a reversal alert, you're short. Just because something wicks down below a support level, which it does a lot, why? Because there's liquidity there, doesn't mean you want to get short on it. When that candle closes below there, they have taken that liquidity and closed bearish. That is a signal. Just because something wicks down below a level, look at the what did we just look at? Euro, US dollar. Look at these wicks. Yeah, does that mean you want to be longing it? No, it means I want to be shorting it. Why? Because the buyers are not able to make an awful lot of progress, are they? Yes, the candles are bullish, but look at how many sellers are in control at the moment. Yeah. If you take pending orders, basically, is what you're saying, you will get so many entries that just never look like market structure at all. You just get wicked in constantly, which is why we use candle close for everything. You want confirmation, basically. I have tested it, but I've had it drummed into me virtually every course. You trade on candle close. unless you're scalping. If you're scalping, a lot of what you're doing when you're scalping is you're taking preemptive moves. So if you see a big strong wick to the upside like that, you go short straight away as soon as that wick is retested. So if we see a big candle at the high after a push up, yeah, and you see that, and then price pushes up into there, I would be happy to take a short there in the assumption that that is going to be the peak formation candle. So I get in before I have confirmation of it closing to the downside, because that delays your entry. And obviously, this is the thing with the market reverse alerts indicator. A lot of people say it's too slow. It's not slow. It's confirming. It's making sure we've definitely got sellers on board. That's the only reason that will light up, because we've definitely got that low broken. Does it mean that that is going to work? No, because breakouts fail all the time, don't they? But if you got in every time that wick went through that level, you'd probably get in 4 or 5 before it pushes up, and then it finally gives you a structure break. So always better to wait for candle close. Thanks for the follow, Q8. Q8 Warrior. Probably want to see oil, don't you? Right. Let's carry on. Aussie dollar, US dollar, hourly extension. Missed that one as well. M5 reverse alert. You won't get because of the extension on the news. CAD Swiss. So this is a pretty good one. Hourly extension to the downside. This is a RSI extension on the hourly. It's also a 125 ADR hit. Reverse alert's going to be pretty tight on this. So CAD Swiss, this is going to be a nice entry as soon as we get that alert. Again, you know, that is our line in the sand at the moment. This thing could move up like this and then wick through that and do that. Yeah, we do not want to be in, because that is not a bullish candle. Yeah, the whole idea of candle close is it has to close in the direction we want price to be going, i.e. the bulls are on side. We want them on our side. Bears are on side. Yeah, we've got bearish, bearish, bearish close. If it had wicked through like that and then flown that way, we do not want to be in. Got to wait for the confirmation that, and yes, sometimes you're going to get a candle like that and you're going to miss the move. But for every time you miss the move, there'll be another 2 times that you will get into a move that will just fly back the other way, straight against you. So CAD Swiss, M5 reversal alert, wait for that. Enter long, propulsion gap targets to the upside, upper ADR on the other way. So that would be 44 pips to the upside. Swiss yen. That's a 4-hour RSI extension. So this thing's been flying, the Swiss yen. It still is. We almost hit ADR today as well. So massive, massive, massive strong move. We've had 2 bear candles pretty much the whole way. We've had a couple of dojis in there as well, but pretty much 2 bear candles all the way since we got extended here. Just about. It's just been continuously pushing. So really, really, really strong Swiss franc and weak yen has made this the perfect combination. But obviously, we got a big, strong push. At some point, they're going to do a profit take move. But you can see how efficiently this has been traded. Very few propulsion gaps left at all on this. If you look at the hourly, you can see we've got quite a few on the hourly, but they're all kind of been pulled back into. That one there is probably your best bet, 200 ADR. We've got this whacking great one down here. We've got that's pretty much filled. But yeah, so lots of downside targets. If we're going to do a pullback on that move, we're looking for something like that. If we're going to just reverse, then we're looking for something like that. So either way, jump in on the start of that move as it comes back down again. So it's extended on the hourly as well, the Swiss yen. So I thought it was a 4-hour extension. Oh yeah, it is a 4-hour. So you're just about on the next candle, you're going to get an hourly RSI extension as well. Euro CAD short. Big extension to the upside on the hourly. We're almost up at the 80 level. Again, we don't often get to 80. You know, when we do, we're waiting for that move back down again. Yeah. So just waiting for that propulsion move back down into there. So again, drop down M5, reversal alert, just had it. So that's where I've got in. And just looking for that push down. Euro pound also extended hourly up to the 80 level. Good strong moves on the euro. We've got two nice areas coming up. Look at that propulsion gap fill there. Bang, straight out of it. Got a little one up there to aim for. So there is potential more upside. We've also got this liquidity area here, which they may well come and try and take out as well. Then downside gap target is there. So we've got that high. Failing that, you'll be coming up into that area somewhere. So I'm in there already. If it pushes up into here, second entry and get out on the drop. Euro pound. Euro yen. Pushing at the moment. Nice propulsion gaps to the downside. Good one there. Nice one there. Just about getting extended on the hourly in a second. 4 hourly, we are extended. So again, drop down M5, M15. Take a reversal alert short. That's a really nice 4 hour extension. Again, really strong push like this. And then we'll get that pullback. Yeah. That's Euro yen. Euro New Zealand. Flying off to the upside. Extended on the 4 hour. Hourly. Just getting extended again. Again, this one didn't do anything. So Euro's just pushing at the minute. Euro US dollar. So this one, just be a bit careful of. Obviously, we don't know what's going to happen with the US dollar. The press conference for the Canadian dollar is in 10 minutes. So we'll get that out of the way and then we'll know what's going to happen with these US and CAD pairs. But at the moment, very extended above the 80 level. Again, huge extension, looking for that pullback. That one gave us a nice reversal, A-shaped recovery. Yeah, we're going to pull back into this propulsion gap. We've also got unfinished business down here to do as well. So at least back down into there, if not all the way down there. That is going to require a strong US dollar. So we would wait and see what happens with that one. Pound Swiss, again, extended to the downside. ADR hit as well on this one, almost down to 10 on the hourly. This is a real big extension. M5 reversal alert just triggered. I didn't take that because it's too close to this position here. I need this to be 67 pips, and that was 40. So nice reversal alert there, hourly. Massive extension. So looking for that to push back up again. I kind of want to take one there. So again, filling this gap. There, we've got that target to the downside as well. We've also got this upside target and up there. Yeah, so where we are now, we're either going there or there. Next. Don't know which. Wish I did. New Zealand dollar Swiss, 4 hour. So big extension to the downside on the 4 hour. Again, similar sort of extension to the ones we've had here and here and here. So big, strong push up. Strong push up, strong push up, big extensions. Yeah. So just waiting for that push back up into propulsion. Drop down, M15 reversal alert, which is all the way up there at the moment. Or you could drop down to M5. You're going to get a tighter entry there on M5. That looks good. New Zealand dollar Swiss. And US dollar Swiss. So this one's collapsing at a rate of knots. We've got a lot of money coming into the Swiss franc at the moment. So just got into an H1 M5 buy on this. So there's the reversal alert. Just got in there. Not quite sure why. I've probably got my indicator set up differently on this account. But yeah, so there's your M5. H1. M5 reversal alert, that's playing out nicely. This propulsion gap here. Come back up to retest. We've also got this area up here. But we need to see what's going to happen with the US dollar. Big question marks at the moment as to what's going to happen there. So we need to wait for the press conference from the Canadian. And then obviously FOMC meeting minutes this evening will give us much more indication as to what's going to happen with the US. So In 5 minutes, well, just over 10 minutes, just under 10 minutes rather, we're going to find out what's going to happen with the Bank of Canada. And then this evening, we will find out what's going to happen with the US. Then we've got a bit more pound news later. So we'll have to wait and see. There you go. So there's all the rundown of all the opportunities out there at the minute. How long before the indicator might be released? Oh, what you mean the other one? I don't know. I haven't really thought. I'm just working on it at the minute. It's exactly the same as we've already got. It's no different to what we've already got. All I'm doing is I'm tweaking little bits and pieces of it so it's color coded and stuff. So I'll get it finished. I just want to change the. I want to change some bits and pieces in it to do with yesterday's high and yesterday's low, because what I've got on the new on what I've built is I've got some logic in there, which so with you can see here we got yesterday's high is that red line and yesterday's low is that red line. So you can see here it's not marking out the previous day's high and low. You can't see it because there's no separators. Yeah. So this is yesterday's high and yesterday's low, which is what this line is here. The previous day's high and low is there. Yeah. So it hasn't bothered. I haven't drawn those in. So I've got logic in there that says if yesterday's high is above the previous day's high, use yesterday's high, because that liquidity has been run by that, and that liquidity has been run by that. I've also got last week's high in there as well. So I might put some logic in there to get rid of last week's high. However, last week's high I quite like because it can pull down and retest. So that's actually a good level to stay, keep intact, I think. So there's some logic changes I want to make. So if I switch over to another pair, for example, that hasn't got yesterday's high outside of, there you go. So the blue line is the previous day's high, yeah? So that's yesterday's high, and that is the previous day's high. But the previous day's low isn't drawn in the chart as a line. That's last week's there, because it would be a blue line, because it's within yesterday's range. So what I'm doing is I'm just working on this to just kind of give us the extremes. So if we are closed within, that's what I want to see. I want to see the previous day's high if it's above. I'm not explaining this very well. I'm trying to find, there you go. So that's a better example. Look. So this is yesterday's high and low. Yeah. That is the previous day's low, which is a good valid area. So if we break yesterday's low and the previous day's low is lower than yesterday's low, we want to know about it because that's probably a good spot for a bounce. Combine this with ADR, and all of a sudden you've got confluence of levels with previous day's support and resistance. So I'm just looking to get a decent way to draw support and resistance in. So that area there, this green line you can see, that's last week's high. So if we push back up into last week's high, we want to know about it. So I'm drawing that on the chart and plotting that automatically as well. But I don't want this all shown if it's not a logical area. Yeah. So this green line down here is last week's low. It's logical to keep that in play at the moment. And it's logical to keep the previous day's low in play at the moment. Yeah. So these three are potential upcoming support areas. So people that want to trade reversal alerts at support and resistance, this is going to hopefully help. But I can go as far as to put in the previous week's high and the previous week's low, monthly highs, monthly lows. So there's other stuff I'm just playing around with at the minute. So when I've got it all finished as I want it, I'll do that. But I'm only building it for MT4. Sorry, MT5 people. I don't trade MT5. I'm not going to do all this work for free for MT5. I can do a paid version if you want. But I can't be bothered. US dollar Swiss, ADR. Trade in and out 15 minutes. Very good. Yep, there you go. US dollar Swiss, in and out, done. Where the hell is US dollar Swiss? I might do it for MT5, I'll see. Here we are, US dollar Swiss. There you go. So ADR reversal, that's the EA, took the ADR reversal there. 1/3 of an ADR, done. Quick, in, out, done. Banked, money in the bank. That's what we like, the quick ones. Pound Swiss is playing out fairly nicely as well. Oh, why is it never in order? Where the hell is the Pound Swiss gone? My old eyes. There. There you go. So there's your reverse alert on the Pound Swiss. Just got in. So that's on its way to 1/3 of an ADR for me, which is 1/3 of an ADR is 22 pips. So round about there. So 13 pips away. Let's have a look at what the hedging set file is up to. So hedging set files banked 1/3% today, not a lot, same as yesterday. So up to 7.5% for the week, for the month. Sitting in nearly 10% of drawdown. So there's a few areas on this. CAD Swiss and Swiss yen and New Zealand Swiss. Yeah. So obviously you can see the theme here. It's the Swiss franc. The Swiss franc is pushing very hard and has been pushing hard for a couple of days. So every single Swiss franc position has gone into drawdown. However, it will have hedged and banked some Swiss franc as well over there. So all these Swissies, strong moves at the moment, but they'll all undo at some point soon. Apart from that, there's nothing much in any drawdown of any considerable size. And again, you know, so New Zealand dollar Swiss as an example, there's 3 trades on that at the moment, 1.5% of drawdown. You know, so as we were talking about earlier with, you know, drawdown control and squeezes, I don't class that as a squeeze, 1.5%. If you were taking a normal trade with a stop loss, risking 1% on a trade, all that is one stopped out trade and a bit. It's not a loss yet, is it? All that's happened is it's pushed against us. So whether you class that as a squeeze or something that needs aggressive drawdown control done or not is entirely personal. Average is here. ADR is 60. That's 71 pips. So that literally is just over an ADR away of an exit, isn't it? Which is very achievable. Tomorrow, we could wake up and that thing's up there. Don't forget overnight this evening, we've got the interest rates, sorry, the unemployment figures for the Australians. So this will drive the New Zealand dollar as well. The Aussie news always affects the New Zealand to a certain extent and vice versa. So we will get some movement off of the Aussie and the New Zealand overnight. So just be aware of that. If you've got any Aussie and New Zealand pairs on, if you've got anything that's in profit, you might want to bank it. We do. That's what we thought it was going to be. What was I talking about there? Oh, you talked about the indicator. Yeah. Well, I wasn't planning on releasing it as a paid indicator. I was just going to put it out there because it's nothing. I'm not doing anything. That's the reason I'm doing it, Adrian, is because what I've just produced there, that thing that I've just shown you, is literally taken me an hour and a half this morning to do this. Because I haven't done anything. All I've done is I've amalgamated 3 indicators that already exist, that are already out there. All I've done is amalgamated them onto one bit of one program. Converting all of that into MT5, however, is a bit of a task. So, but none of the 3 indicators I put out there are available for MT5 either. So not only would I have to convert them all to MT5 and read, it's just more, you know, I can do. I'd probably want to get some money for it. I don't know. I'll see. Maybe I'll do it, and if people want to buy it, they can buy it. And after a certain period of time, and then I'll make it free when I got some money back for my time. But the trouble is time. That it's not a case of don't want to do it. Just seeing what I think is going to happen with Aussie US while I'm looking at this chart. It's automatic for me to go. It's going there. It's just a case of time. I stream for 6-7 hours a day. I don't have time to do stuff. That's the problem. Because I'm always busy in here. I'll have a look at it. I need to get it sorted for MT4 first anyway. So I might pay another coder to do it, to be honest. And then I can just get him to look it over or something. Oliver, you want it for MT5 as well. The reason I don't concentrate on MT5 is because over 90% of indicator usage is MT4. Over 90% of MetaTrader usage is MT4. You guys that are using MT5 are really in the minority. Everybody's using MT4. Not everybody, obviously. People are using MT5, but the only reason you'll use MT5 is if you're forced to. Look at the if you look at the new comparison table that I've done on the website for prop firms, yeah. So we've got what 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 different prop evaluation types that you can do here, yeah. MT5. Sorry, no, that's not what I want to do, is it? Reset. Well, actually, just look at the comparison. It's easier. Yeah, so look at the MT4 usage, right? There is 1, 2, 3, 4, 5 there that don't allow the use of MT4. Every other one does. And the only reason is because they are MT5 only. So out of all the prop firms out there, there are 2 that are MT5 specific. Everybody else uses MT4. Brokers, there are no specific MT5 only brokers. All brokers offer MT4 and MT5. And the reason is because there's 10 million indicators out there for MT4. There's about 100,000 out there for MT5. So why would you pick a platform which is free, where there are very few indicators available commercially, and everything is available on MT4? It's just, this is why there's been no adoption for MT5, because MT5 is just not as good as MT4. It's got a better backtesting system, and you can use it if you want to trade stocks and futures. But no one does. If you want to trade stocks and futures, you don't use MT4. You use a stock and futures software package like Jigsaw. You don't trade stocks and futures on MetaTrader. You use, and that's why they released MT5, was to go into the futures market. And as soon as they got MT5 out, they went, crap, everybody else's software is a billion times better than ours. And everyone went, well, I'm not going to use it because it's buggy. They release updates all the time, which breaks stuff all the time. A lot of indicators conflict with each other on MT5 because of the way it works. It's got a better backtester. That's it. Literally, there's no other reason to use MT5. And as Sagar's just said, MT5 takes up too much RAM. It's more labor intensive. They've basically created a graphical user interface version of the charting platform, and it's just no good. Which is why everybody's on MT4. But if you use MT4, if you have to use MT5 for some reason, just download a demo of MT4 and get everything charting on MT4 and just order execution on MT5. Just do all your charting, your analysis, and everything on MT4. And literally, if you need to use MT5 with your broker, fine, have MT5 as well. But just don't get everything, because everything's available for MT4. You know, it's all like the wide range bar indicators and certain indicators out there. You know, like these moving average in color doesn't exist for MT5. Yes, it could be built and coded for MT5. But my God, it's a hassle. The symmetrical triangle pattern indicator, I haven't released a dashboard for MT5 because MT5 couldn't handle it. It just can't handle it. It hasn't got enough processing power to do all the calculations in the symmetrical triangle indicators. You know, that indicator works beautifully on MT4. There aren't any symmetrical triangles. There we go, there's one. There's a couple. Yeah, so, you know, the symmetrical triangle indicator works beautifully on MT4. It is okay on MT5. On low time frames, it flickers and has an updating problem. The dashboard, I couldn't get it to work. Literally, not only me, I employed a programmer to look into getting the MT5 version of the dashboard working. He couldn't do it either. So we had two people looking at it, trying to get it to work. And physically, MT5 just couldn't do it. We looked at ways of delaying updates, all sorts of things, and it just didn't work. And there's a lot of indicators out there where people just start to convert them and they go, this is just not going to work. The hassle factor is too much. Cost of development. You know, it's all there for free on MT4. So, you know. Can you please show your WRB hidden gap indicator settings? Looks like I have different wrong propulsion gaps. So you may have, the only two settings are, the start calculation from, which goes back in time, and the look back bar count. I have set to 1. It says default is 3. So that is the one you'll probably find will change what you see, yeah? So you may have it looking different because of that setting. The reason this is set to 3 is because the official definition of a wide range bar is that the propulsion candle has to be larger than the 3 previous candles. Personally, I don't think that makes the blindest bit of difference. A propulsion move is a propulsion move. If you have a propulsion move followed by a little candle followed by a propulsion move, yeah, and that one is smaller than that one, does that mean the market's not going to come back and retest it? It is. So I switched it to 1, which means that the propulsion candle has just got to be bigger than the previous candle, which, as a fact of it being a propulsion candle, it's going to be bigger than the previous candle. It's just always going to be there, isn't it? So again, the one that I'm building doesn't have that setting in it. It literally just shows you all propulsion gaps because it will miss some. Especially in a volatile market, you'll get some that are missed, and that's why I changed it. So anywho, there you go. So that's all I've got for you today. Anybody get on that today? I doubt you did, but if you did, well done. It's come down hard. Look at that. In the profit. I'm holding that because oil's going to kill me. And Aussie dollar Swiss is killing me as well. This Swiss franc is on a mission today. I'm going to try and buy up the lows if they push it back down there any further. Okay, so that's come down very, very nicely. So we are getting some US dollar strength starting to show through now a little bit. This Swiss franc is really strong. Look at this. US dollar Swiss is really struggling against the Swiss franc. Swissy's on an absolute mission at the minute. And the euro will be pushing along with the Swissy. So euro and Swiss franc look good. But yeah, good strong move there. Press conference is underway. Inflation will not reach 2% until late 2024. Bank of Canada's Governing Council debated whether it has raised interest rates sufficiently, which I guess you thought you had because you didn't increase them. That it? So he's still going. So we are still going on with the press conference. So when that press conference is over and the market's got all the answers to all the questions it wants, we'll probably see a little bit more volatility coming in. So Shorten, in drawdown control, why do you not fully exit the first trades and only exit part of them? Because that would be using a stop loss, wouldn't it? If you want to exit all of the trade, feel free, but you're just using a stop loss strategy, aren't you? Which defeats the object of position trading. You're not entering position, you're entering stops. The idea of position trading is to keep your average price within ADR or as close to ADR as you can. Yeah. So there's my average. Yeah. If you measure that distance at the moment, that is 99 pips. ADR is 101. So I am within an ADR of an exit. If I had on this trade got in there and as price pushed against me, exited the position, that's basically just using a stop loss, isn't it? What's the point in that? Well, obviously it's just trading, isn't it? But so you just would get in and you would put a stop in the market at whatever you want. So if you want to try it, do it. You would just obviously take a lot of losses because you'll get stopped out all the time. Depending on where you put your stop, obviously. So if you're going to put your stop maybe 1 ADR or was it 100 pips ADR? So that moved against me by just over 3 ADR, and I'm still in that position. So your decision would be, where do I put my stop? 1 ADR, 2 ADR, 3 ADR, 4 ADR? If so, what percentage risk do I use? But I am out of that position and out of that position with a portion of them so that it releases some of the pressure and moves my average price up closer to an exit. That's the purpose of drawdown control, is to keep yourself within reaching distance of an exit, waiting for the market to move back down. When it moves back down, you're out. Yeah. Go and watch this bootcamp day 4. But if you want to use a stop loss, use a stop loss. And you can enter multiple positions. So what you could do is you could say, I want to get in 1 ADR apart with a 2 ADR stop loss. And then if that happens and it doesn't move 2 ADR, but it moves 1.5 ADR, you get out. Fine. If it moves 2 ADR, you'll exit that one and you'll enter another one. So what you'll have is constant losses on a squeeze, which will eat away at your profits, rather than partial losses, which will eat away at your profits, but give you an exit which will make you more money because you'll be able to get out quicker. Well, actually, you won't get out quicker. You'll get out slower, but you'll take a full loss. I've never tried it because the whole purpose is not using a stop. I've never tried it. That's what to do. So go and get the market reverse alerts EA. Test it. Just go and download the demo if you haven't already got it, and then test whatever strategy you want to do and see what it does. PM, looking forward to your prop analysis page when it's published. It already is. It's there. It's on the recommended. Will I be updating it as they change their offerings? Yeah, I guess. They don't really change their offerings. They don't change. I guess they probably. I mean, I'm on all of their because I've done evaluations with all of these companies. I've either been funded by, or am funded by, or have done evaluations and failed with all of these guys. So I'm on all of their mailing lists. So if there is a change in their rules, they will email out everybody. So I will get notified if there is. EA have just changed theirs. They've just got a new extended, which I've got on there. Look, you can see. So they've got this new one called extended, where your max days is longer, but you now have a minimum as well, which basically brings it in line with my Forex funds, but makes it a little bit more attractive in that respect. Yeah. You also get paid quicker, and you get paid a little bit more. But your max loss is smaller, and that is more expensive than that. So you're paying a little bit extra to get a little bit extra. So in fact, EA now, looking at the extended, is quite possibly the better of the two. So let's go with minimum days as 5. So those are your 3 5-day minimums. So sort them by cost on a 50k account. So there's your difference in price. So it's difference between $300 with my Forex funds, $325 and $338. So there's basically $40 difference between E8 True Forex funds and my Forex funds now. However, from a trading, these are the 5-day evaluation, guys. Yeah, 2-phase 5 evaluations. Yeah, two-phase 5-day evaluations. So E8 funding basically now has a slightly better offering in that respect, but not as good as my Forex funds and your max loss. However, what I would say is this is the one that gets everybody, the daily, not the max loss. It's normally the daily that takes you out, and that's the same across all 3. So in theory, if you look at the 3 combined now, E8 is actually now taking over from my Forex funds. All got 100-to-1 leverage. And it basically comes down to price at the end of the day. So you're paying $40 for 30 days extra. Do you think that's good? If yes, there you go. And this is the whole purpose of this comparison guide, is you can do this sort of thing now. I can say, right, well, if I want to pay $40 extra, is it worth having that extra time? If you're a position trader, probably yes. However, if you're a position trader, that might help you. The max daily loss, if you reset and look at max daily loss, they all have 5% as a max. There is nobody that doesn't have more, that has more than 5% as a max. So there's so little. This is what I keep saying. You know, I say this all the time in here. There's no point in using another prop firm. Yeah. This comparison shows you how good all these prop firms are. If you put any of these 8-cap ones into the equation, they will all either be more expensive or have worse trading conditions than these lot. The ones that I've picked here, there's like, how many is there? 1, 2, 3, 4, 5, 6, 7, 8, 9. There's 9 different prop firms here. There's so little to choose between them. All the others are either identical or not as good as these. The reason I've picked these 9 is because they've been around for a long time, have a massive customer base. I've been either funded with them and paid with them, or have got past evaluations with most of these guys. And they've all got very good market execution. Apart from True Forex funds, who I think is 8cap. I might be wrong. I might be wrong on that, actually. Yeah, no, I didn't. I think I left all the 8cap ones out again because there's no point in having an 8cap one because they're all the same. So yeah, they're all pretty much the same. But you know, go and do the comparisons on all of them in your own time. Maratov Rouge. How can I see my average price or break even at the chart? So you can use an indicator called ME break even line. It's on the website. If you go to the website, go to indicators, other indicators and template, download the zip file. There is an indicator in there called break even line. Oh, it's called ME break even line for MT4. If you've got MT5, I don't know. I haven't got one. Sorry, don't trade on MT5. Just chuck that on the chart. Although I'll probably build one. Everyone gets moaning at me about MT5. Hello, sir. How are you doing? Fine, thank you, Gambold. I think oil is going down and NASDAQ long. Okay. I have to disagree with you at the moment. Oil looks like it's going through the roof. NASDAQ, however, is dropping like a rock. But that's now. I really want oil to come down. It would be lovely. It would save this account. This is my last one. Then I'm not got any Feudal Crest left. I'm not going to take any more Feudal Crest at the moment. The only reason I did these is because they were on a 2-for-1 offer. So I can't miss a bargain. Feudal Crest are really good with that. I don't know if they've got anyone. I don't think they've got one on at the moment. No, they've got no offers on at the moment. I'll let you know when there is though, but because these guys, when they do their 2-for-1s, they're really worth it. But the problem with Feudal Crest, as shown here, is EA's allowed no. Yeah, you can't use EAs on Feudal Crest. It's all got to be manually traded, and this is the problem with manual trading. You get yourself into a mess with it because you have to do everything manually, which means you miss trades and you put orders into the market which aren't based on a strategy, and it all starts to go wrong. So that's why I don't like it, which is why I'm all about E8 and my Forex funds, because it's all fully automated and I don't have to think about it. Oh, as much as I can be, apart from the scalping. So anywho, I will leave it there today. I was going to leave it there about an hour ago and I'm still here. So I will be back tomorrow morning, 7:50, same time, for the Frankfurt session, and I'll be back at 2:20 for New York, ahead of the news, just to make sure you've got it. Watch your exposure. Yeah, if you've got any big exposure on Aussie or New Zealand, you might want to get rid of a little bit. If you can, do a bit of drawdown control, maybe close out anything that's in profit. So New Zealand dollar yen, I can close out in profit. Get rid of that. That drops that New Zealand dollar exposure down, etc., etc. Yeah, so just keep an eye on your portfolio, and just be aware we're going to have some movement potentially tomorrow. We've got big day again tomorrow. We've got PPI. Macklin speaking won't do much because that's all going to come out of the press conference today. We've got the GDP for the pound as well tomorrow. So again, that will probably have an impact not as much because the GDP we're forecast to not go into recession. If this comes out as negative, then it will probably have a big impact, but I don't think it will. So apart from that, we haven't got a massive amount of news tomorrow apart from the PPIs and obviously the Aussie overnight. So, and then we're off into retail on Friday. So should be a fairly busy end of the week as well. So good volatility, hopefully. All right, so anything you need, I'll be in the Telegram group. I'll be back tomorrow morning and tomorrow afternoon as usual, and see you then. Hopefully you have a good day.